Frank Adante, the Rubicon project priced its IPO at $15 last year at this time. Stock fell for a while, but it's really climbed back nicely, now around $17.50. So what happened? Did the competition make you stronger?
So we pioneered the company with a mission to automate the buying and selling of advertising. So the simple way to describe what we do is we're like NASDAQ, but for advertising. And the automated advertising market didn't exist until we pioneered it. So it's been an education effort for us, as a private company. The market's grown quite a bit. It went from 0 to $9 billion opportunity for automation alone, which is projected to triple over the next few years. And it's a $250 billion market opportunity overall. So around the time of our IPO, this was a new concept to Wall Street. And it was the first time that we really had a chance to talk publicly to our investors was after our IPO. Do that education. I think that's what's happened is they're understanding our business better than they did prior to and at the time of our IPO.
Well, you've been coming back, but a lot of your competitors have dropped off, whether it be TubeMogul or Rocket Fuel. Did the space get too crowded, or is it just that you guys are very much different from the other folks and people are finally realizing that?
Well, we've continued to perform. The business grew 49% year over year last year. We had a number of consecutive quarters as a public company where we exceeded the guidance that we gave to Wall Street, and that's been, I think, part of what's separated us from other public companies.
And you bought Chango recently for $122 million, so you're spending some of that IPO money. What do they do for you?
Sure. So part of the marketplace that we enable connects buyers and sellers. So the largest brands in the world, companies like News Corp, eBay are customers of ours. As a matter of fact, more than 50% of the top 100 websites around the world use our platform. Similar to a company who's trying to list their stock, they'll choose NASDAQ or they'll use the New York Stock Exchange. It's very similar in the advertising business. When these companies choose our exchange in our marketplace to sell their advertising, everybody else that's a buyer of these ads has to come through our platform to access that. So acquiring Chango, this gave us the ability to add to our current product set. Currently, we service desktop display, mobile, and video advertising. And then Chango is focused on intent marketing. So intent marketing is basically using search and contextual data to determine a consumer's intent and to make advertising available there. So this is a part of the market that's only been, or primarily been available in search. A lot of that's been going to search advertising, but it's not the search queries or the paid search itself. It's those that advertising that's actually going to the content networks in search. We look at that as a big opportunity to be able to take those dollars, which is an additional $35 billion incremental addressable market for us, and move those dollars from small blogs and search into premium content websites like the customers of ours that are Fox and eBay and Turner.
When you say search, I think Google. So is Google a competitor of yours? They're a customer of yours? Sometimes it's hard to tell.
So they're both. So there are two large exchanges in advertising. There's us and then there's Google. The way to look at that is Google's sort of the closed network that built their platform for themselves. It's kind of like American Express versus Visa and MasterCard, whereas we're the open exchange or the open marketplace. So Google happens to be a customer of ours as well, so they're a buyer in our platform. So if you want to, similar to the stock market, if a company like Rubicon Project who chose to list our stock on the New York Stock Exchange, if anybody wants to buy stock, ultimately has to come through the New York Stock Exchange. So if Google wants to buy advertising on behalf of their customers for our customers, they have to come through our exchange to do that.
All right, and then finally, where does Facebook fit into this? When you said there's a $35 billion opportunity, they're trying to develop their search as well. Can they eventually become a pretty tough competitor for you?
We'd hope that they would eventually become a great customer of ours, similar to Google, who has to access our platform to be able to buy the advertising from our customers. I think Facebook has that opportunity as well to leverage their data, but leverage that across our platform.
All right. Thanks a lot for coming on.
Thank you.
Thank you for watching The Street.